Hello guys! This video will be a longer one as usual because day trading has to be explained very clearly so that everyone understands the risks and how to get started. So I said it's all about compounding, and I think that's true because day trading is not supposed to be with a lot of money in terms of how many money you have. So you only want to use a little percentage of your capital for day trading. So what is day trading? Day trading is intraday trader. So um, you buy and you sell at the same day. Uh, this can be kind of like 3 trades a day if it's a good day. If you speak of more trades, you're not day trading, you're actually scalping, which is different. So this is a meme. So it said start day trading with 500 bucks, and it's gone. So this meme, I want to explain that because starting with trading, and if you don't understand the risks and you use margin, which I'll talk about later, is a very high risk. So if you want to start day trading, you should look for high volume markets because they're more logical than low volume. So if you want to trade crypto and start with with altcoin day trading, excuse me, it's not the best because market movements are really illogical sometimes. Candlestick charts. So this is what I use. I don't say there aren't any other charts that are really good, but this candlestick chart gives a lot of information. So this is what it looks like, and every candlestick looks like this. So when a green candle is opened, you start here. So if you first go down, you have this will be red. So you can choose what time frame you want it to be. So if you choose for 5 minutes, this is a span of 5 minutes, and then the next candle will come upon it. So this is the opening. So first, this chart on this candle, the price first went down, and then it came back up to here. It went down to here, excuse me, to the low. So it came back up and went to the high. And before the 5 minute closes, it went to the closing, as you see here. So you have 2 wicks. The vertical lines are wicks, we call them, and this is the body. So this is the same, but in a red candle, you have the opening on top. So if you go back to here, to this chart, I don't know which time frame it is. It's a long time frame, as you see, from March till April. So probably, I don't know, days. So every candle will be. So if you talk about this one, first it went up, and then it went down to here, and before it closes, it went a little bit back up. So we can see it on the chart on the 1 minute. Let's see because it's really fast. Uh, oh, so as you see here, this one went up first and then went down to here, and now they bought it back up a little bit. So in 2 seconds, now it's down. So now it closes here. So the next candle is here. So every candle is 1 minute. So here it went back up. So let's wait till it goes down if it doesn't take that long. So every movement is a buyer now. So now someone sold it. Multiple parties sold it. So now we have the wick. Let's hope it goes down. Now it's red because it's below the entry. So that's how you create a wick. So if it goes back up, you have a little wick on the other side, on the underside. So if you go back, so this is candlesticks. So risk reward is better than beliefs. So the reason I say that is because if you start day trading, you will not think like an investor. So the risk reward is way more important than beliefs. Because if you trade some coin, let's say uh, Bitcoin, you can say like there's a limited amount and it will, I don't know, it will replace gold or anything you believe, it doesn't matter. So if you think that and you say in the future will be a lot worth a lot of money, and you say that, that doesn't matter if you're day trading because you want to take short-term trades. So it will not go up all the time. Maybe in an extreme bull market, but that doesn't matter. So the risk reward is the thing you look for as a trader. Yeah. So risk reward is basically the reward you get, and you put it against the risk. So you see which one is bigger. So you want a risk reward around, well, if you day trade, it'll be like way bigger as swing trading. So most of the times with me, let's say 3, 4, but it can be close to 7 as well. Above 10 is instant stop loss. So until the next one. So fees are like parasites. I say this because if you want to day trade, you should look for the best fees. You want to have the best exchange for your type of trading. So if you want to trade altcoins, you should go to Binance or UOB. But if you really want to start day trading, you should look at the fees because when you want to step in and out a lot of times a day, so let's say 3 times, and you pay 0.14% on Bitstamp if you're under 1 million, that's a lot because every trade you'll pay 0.14%. This means you have to make uh, 0.14% every trade to be break even. So when you enter, you're instantly at loss. You instantly have a loss of 0.14%. You may think that's not a lot, but if you take a lot of trades, this will um, kill your compounding. This will kill a lot of your portfolio if you start trading, because in the beginning you don't really have that many good trades, and yeah. So the maker fee is like when you want to use a limit. You always use a limit. If you take a market order, this says taker fee because you take the market as it is. You always have to pay more. Maybe I think it's, yeah, Binance it's the same. So if you want to trade altcoins or you just want to buy a coin, it doesn't really matter if you use market or a limit at Binance. Yeah, if you're below 1 million, it it doesn't matter. If you're above, it changes, I say. So um, the thing I personally use is Bybit because, yeah, because of the fee. There may be other exchanges. You want it to be a secure exchange and you want the best fee. So security is really prior. Is priority. Security is priority, and the next one is the fees. So Bybit is a real good one. Really important thing with day trading is if you don't set take profits, you will not see a lot of money because I said you have nothing if you don't sell. So again, it's like with the beliefs. So if you say like it'll be, I don't know, Bitcoin will be 1 million in the future, that really doesn't matter if you day trade. So if you don't sell, you don't have anything because day trading, the chart will go up and down constantly. So if you perhaps want to play the bottom, you went in here and it went back down like this. So you would have had a trade of like 2.5% plus margin if you use margin. Went to 1%. So basically you lost 1.5% because you did not sell. And if you did not sell at the 1%, yeah, like you'll miss out a lot of trades because you simply don't sell. So before you enter, always make a plan, like I say in the previous videos. It's really important. So the next topic is margin, really important. This is a meme. So you placed stop loss, right? What is a stop loss? And then he looks very, yeah, unprepared, because if you don't use the stop loss, the exchange will use it for you. This means liquidation. So if you want to use, let's talk about an extreme. Let's talk about an extreme. It's like if you have a leverage of 50 and the price goes down 2%, you will lose everything. So this is really bad. So exchanges do have cross margin and isolated margin. This means that if you use isolated margin, maybe I could explain a little bit. So if you use isolated margin, let's say you have isolated and you have cross margin. So let's say you want to trade several coins in margin. It's just you deal XRP USD and BTC USD, I don't know. And you have several others like XLM or something, and here you have the same. Oh. And here you have the same. Let's put XLM as well, or some other coin, I don't mind. Link BTC and another one. So let's say, so isolated margin means let's say you have here x10, x20, 50. These are really big numbers. If you're wise, you'll never use them. X10 maybe in some cases, but probably never. And here you have the same, 20, 50. So in cross margin, let's say Ripple goes up. So the price goes up a little bit. It doesn't really matter. This one goes up as well. And this one link goes down really fatally. So in isolated margin, it says in the name itself, isolated. So every trade will be separately arbitraged, let's say. So you will be, so the price drops more than 2% on link. You will lose this position, so everything you have in link Bitcoin will be lost. But if you use cross margin like this, and you have a really big position in link, and link drops 3 or 4%, these trades will be eaten up as well. So if they will not make more money than this one lost, you will lose every position you have in cross margin. So it's really important. You should know that before you start trading. So I personally always use isolated margin. I only trade Bitcoin with margin as well. Ethereum as well. Sometimes Ripple, but Ripple not that recently. But it's an important concept. So back to margin. Let's think about something I can say. So the reason I use margin, I don't say you have to, but the best reason is to use capital that you have stored elsewhere. So let's say you have 10k and you have 8k in staking. This will mean that you have 2k left for trading, but you want to trade with your whole capital. So you have to calculate the margin. So this means that you have 10k to trade with, but you only have 2. So this means you'll Most of the time, if you have stop loss of 1%, you will use a 5x, so 5x margin, so that you only lose 1% of your total capital. Yeah, this is the really way. This is the way to use margin and not to, I don't know, trade with your full capital and 50 exits and lose it all. That's a bad way. Day trading is small losses and big wins. So you want to use risk reward as a tool to make money. So the risk reward says that it depends on the number. So if you have a risk reward of 4, this means you can have 3 bad trades and 1 good trade uh, to be break even. So the higher the risk reward, the better. But it's to a certain level, because if you have, let's say, really extremely a risk reward of 50, you will be screwed, because 99% of the time you will be uh, yeah, stopped out. So wait, risk reward is like this. So if you want to put a trade really fast, doesn't matter. So you want to put an entry here. So if it drops, you want to buy here on this line, and you will sell just below here. Let's go for a big one, and you will sell it at the tops. So this is a risk reward of 11, which is a lot. So basically, 9 out of the 10 times you'll be stopped out. But this will mean if you use 11 trades, you can be 10 times wrong and 1 time right, and you'll be at break even. So yeah, that's basically it. Let's go back here. So if you want to be day trading, you want small losses and big wins. So day trading crypto in the weekends. I placed this meme because in the weekends you don't have volume. It's the same as with stocks, but in the weekend stocks are not open, so no one is trading stocks in the weekend. And yeah, the crypto market goes on 24/7. But the reason that the volume is low will mean that you need less money for like whales to move prices in illogical. It's easy for whales to make illogical movements. So I don't say you can make money in the weekends. I just say it's a little bit harder to day trade and depend on certain structures or levels to place an entry. And yeah, most of the times in the weekend they'll go just below it, or yeah, it's not that good, I believe. So it's for me personally. For you, I don't know. You can try, but my advice is you better not. So, but you can place trades in a different way. So, not the same system as you use for day trading during the week. Mm, so, highs and lows. This is really important if you want to see the bigger picture. So, let's say here you have an high and a low. So, this means you have levels, highs, and lows, and so on. So, let's put this away. So, uh, let's see. The big picture. You always want to know the bigger picture if you start day trading, of course. So for Bitcoin, you can see on the high time frame, you lost the big structure, like this one, and now we're going down. So we will probably have a little support around here, as I said as well in my previous video. So if you would use an entry here, it would have been a swing trade probably. But this does so. How you can do it as well is you have like this bigger time. Um, you have like these levels on higher time frames, and you will wait until they come here. So if you're after the monitor or after the screens, you go on the low time frame and you see, oh, this is the big level. So you place the level before. You see even, oh, it touched it. So now I'll be looking for longs. So first you see this, it rejected, it went down. So basically if you see this, highs and lows, excuse me, yeah, I don't know. You see this and it goes up. It breaks this level, it goes down. This is a pullback. So from here on, you can expect maybe some um, opposite direction movement. So now it could be a good time to be long, because this is a really important point as well. So we have this level. So now we're upon it. So yeah. So higher lows and what did I say? Highs and lows, excuse me. So first you have a low and you want to search for structures and important points. So this drop was really important. So this low is very important as well, and the high as well. So you see it here. You have the high, the low, it lost. This one lost. So we go to a new low. We went to a high, which is the previous high, and now you have a higher low. So this is the first trigger point. So we have this low and it's above this one. So now we wait and it's higher. So you made, in theory, so go back to the PowerPoint. So a higher high is like an upward move and a low low is like going down. It's really obvious, but it's really important. So you want to be the lows. Every low must be lower than the other low. So this one was here, so this one is lower. So you have a lower low. And here you have a higher high, and so on. Let's go back. So here you have it. This was the important level. You bounced back upon it, kind of. And here you have compression, it breaks out. So you really have to know like what is compression, what is a higher high, what is a higher low. So let's clean it up a bit. So basically, if you see this, you see this, and you have a higher high, you should be triggered, and like this is not normal because we have a higher high, a higher low, and then we have a higher high. So this will mean that we have a bigger chance that it will be uh, a higher low again. So maybe it would have been here, but now it was here because of the support level, because we broke the resistance and made it back to support, and so on. So that's how I do it. And yeah, now you have this one, you have a higher high, so now you want a higher low as well. So where would that be? Probably on these tops, maybe on the, how do you call it? Like the point where the compression would have ended. So yeah, as you see here, this weird hiccup was the support for the higher low. Yeah, you can see it afterwards. Maybe if you trade it, yeah, you really have to be really sharp while day trading. So, how do you decide where the higher highs and higher lows would be? So here you have the low. Da-da-da, da-da-da. So this one, I don't know. So the best thing you can do is like see where price starts and where price stops. So here you see the tops. These ones were really obvious, I believe. And yeah, no clue what this was. Maybe, yeah, like here. So it's really good to see afterwards. And even me, after trading a lot of hours a day for lots of years, I see that I always go back and look for the reason why it stopped there. So, um, yeah. So now, should we stop here? Yeah, you really have to keep in mind a lot of things. So you have higher highs, higher lows, you have levels, and then you have how do you call it? The way the price moves. moves. Uh, So you see here, these are sharp movements. This one not that much, but it goes up really fast and goes down, ranges a bit. And here you see it goes up really fast, and now you see a point of resistance. So you see the price lacking a bit. So this will mean there's a loss of momentum. So this could be the moment. This could be the high, let's say. So now you want to see where it comes back to, and probably around here, I believe, because this is now kind of a support level. So this is how you want to trade. Set you had the sharp movements and blah blah blah, and then it lags. So this was because it was lagging that I said it should have go down, went down. So I put this in afterwards, and maybe if I take a long time editing, we'll see where it stops. So it could be here because you have like this one, and yeah. So I set this point as well. So either one of those could be one, or you can lose it all, but I don't think that's the case. So one of those. Maybe this is the bottom. You can never tell. So if you want to be day trading, you will take the swings of a day. So this is a lot of time. Wait. So sorry. So if you want to be day trading, let's say this is from 11 till 11. So this is a full day. This is 24 hours, kind of. And you only have 12 hours, I believe, and 12 hours is long. So you want to trade this. So you go long here, short here, long here, and from this time you'll be sleeping, or I don't know, maybe you're 24 hours awake with Red Bull and cigarettes. I don't know, but you have to keep in mind that you only have 12 hours, maybe more. I don't know, and yeah. So you only play this, maybe two trades. But if you're scalping, you go a little lower, and you want to get every movement. But that's not what I'm talking about. So if you see that you trade a lot more, then maybe three trades a day, because this was two trades in a day around here. Maybe if you did it here, it was not that good, but if you're trading, if you're day trading and you make more than 4 or 5 trades in a day, you should think in yourself like, am I doing it right? Is it the good way? Am I using my system? So yeah, let's go further. Then we have indicators. So which ones do I use? So I don't use a lot of indicators. I only use volume and yeah, other indicators. I've never used them, so I'm not going to talk about them much. So you have the moving average as well. That's the only thing I ever used, and it's maybe good to know the trends. So let's go. So I always have volume here, so now I put it off because yeah, if it goes down really bad, so now you don't see it, but if you're like this, eh. So sometimes yeah, like this, the volume goes in, so I put it off. Uh, but the volume gives an extra edge, because if you see that like the extreme points, like you see here and here, you see that the volume is higher than usual. So at these points, I don't know what it was. Like this was the first drop. So at this point you see a lot more volume is going on. So a lot more people are buying or selling a typical uh, moment in time, and this will ring a bell at you and say like, this is not normal. So like if you see the big red candle, so I think it was the big red candle. it was this candle. So don't wait. I'm going to put it off. So don't be mistaken. This is a candle of, let's see, it's 14% in a day. So around this time it wasn't normal. In the moment now it is kind of. So 14% a day then was a lot, and you have a big week, of course. So I didn't take it with me. So it's 30%. It was 30%. So this tells you like the volume is really high. So and it sells a lot. So you should think, is this rational or not? And at the points of high value, it most of the time it isn't. So you see which way is it going, and what can I get out of it. So if you see a big red one, usually with a big volume, this is not typical. This is illogical. So this is not the right price at that time. So you see it comes back up. So if you saw it at the bottom, of course you didn't, but you would have made 40% in a day. So the bottom doesn't count, but maybe 10% you could have had, maybe more. I don't know. Uh, what price also tells you is that, like you see here, it was kind of low. If you look at this, so you see the volume will tell you there's a lot more of money. There's a lot more. The volume will tell you there's a lot more interest at that point. So that's the worst thing around here. So you see, the first time we went to 60K, everyone was really insane, throwing money at Bitcoin. So there's a lot of interest here. But you see a little decline. It was declining. It still went up and made it a higher high. But the volume is declining, so there's less interest. But now the worst thing is that it's going down really bad and it stays here. You still have some spikes, but they're not as big as these ones. So if it goes down and it doesn't spike, this means that there is little to no bullish interest, let's say, because when the price goes down, I'm gonna put it away. Excuse me, it's a lot. Uh, put it all away. So these ones too. So if you see this, if you see this chart and it goes down really badly, there's little to no volume in. If you look at this volume prices, there's no volume. So this means there is little to no people buying or selling. So this is not what you want. You want a big red one to see reverses. So here you don't have volume, so probably this one is like, I don't know, you can call it a scam week, or I don't know. I don't think this will hold very long. Uh, this is a level. You can't tell it for sure, but it's something you put in your backpack, and you keep it in the back of your mind. So this is something you put in your backpack to start a trade. So you see the volume and it's whack. But you do see a little. No, you don't. Yeah, it doesn't look that good, let's say. So we move on. So yeah, on crypto Twitter you'll have a lot of these ones, or Bart Simpson's, or yeah, it's really fun. Everyone should go on crypto Twitter. It's not to be a little point is as well. If you start with crypto Twitter, you better not take every even the big ones that do make money. You don't need to take them seriously. They are all joking. So even if they say buy this coin, they're joking because they say it in sarcasm, and they say buy this coin because it really looks trash and it's really funny. So if you go to the next one, free sites you can use. This is really important. If you want to day trade, I always use TradingView. This is this one. Yeah, I think everyone knows that. You have Agar as well. This gives every market rate so of a higher value, so you can preset it. It always goes back to 100k, so I always put it at 1 million, because otherwise you always have bling bling bling. So every time someone buys or sells at market order or get liquidated, you get it here. But for liquidations, you don't have noise. Every market order uh, above a certain level, so now it's 100k, it'll give a bling. So bling bling bling, and you have a 10-second chart as well. So on TradingView you don't have it, only if you pay for it. So you can see the lower time frame. That's really nice. And you have all those big orders you see. So so you don't have to trade on them, of course. So if you have 1 million, you see the bigger ones. So if you put it on and it makes a lot of noise, you know there's something going on and it makes you aware. Maybe if you're gaming, if you're watching Netflix, it's really handy. So you pause it, or if you're online gaming, you just throw away your game to start trading. That's the thing I use it for, the way how I use it. You also have heat maps. So this is then a 1 minute chart, and you see order blocks. This is this one is like the regular. So these are orders that are stay chart. So if one guy puts 10 bucks above the current price, it'll be here, and another one plays a million, then you get this big, uh, yeah, kind of a trap, a ladder, kind of stairs, excuse me. So you'll get the stair thing because it's cumulative. The yellow ones are bigger ones as usual. So here you have, if you see big blocks at the same levels, you can see where the orders are stacked at Bitfinex at the moment. Uh, so be like this guy and be smart. Alright, thanks for watching, and yeah, I would appreciate it if you guys comment, because I like comments. Make them as hilarious as you can. That would be awesome. Maybe if you have some ideas or you want me to explain something to you, you could always drop it in the comments. But yeah, don't like and subscribe, that bullshit. Alright, later guys.